Hello and welcome to the journaling session, and today we will do journaling of 27th of March, Monday. On Monday we will look at what trades I have taken on Monday, and what I was anticipating and how market played out in response. So Mondays are usually very low volume days, and in on Mondays sometimes a move like this happens where we dropped straight from 1972 till 1945, which is around 270 270 pips of move. But these are not usual for Mondays to move a lot, where we move a lot on in Mondays. So today we will go through our trades, only the big lot one trades that I have taken, and we will look at what I was anticipating and how prices and market played out. So the first trade was taken in Asian session at 241, right in here, and it was buy trade, and it was taken out of session. It was out of session trade. We will look at it in M15 time frame, and if I look at M15, I executed this trade right in here. Once we starts to break above the previous M15 high, I was anticipating that we can potentially keep pushing up till 1978, and it was a losing trade, and I lost around 9 pips on this trade. And if I look at M30, the reason I could have avoided this trade at all, if I look at H1, the H1 candle wasn't closed, and at that point there was no bullish H1 candle, so there was no support formed at that point, and I should have waited for at least one hourly candle to close, and may have executed on next hourly candle right in here. So it was entirely my mistake. The execution was when there was no H1 candle closed, and the previous H1 candle broke below this support area, so it was counter trend trade with no support formation, which resulted in loss, and I shouldn't have taken this trade at all. And if I look at second trade, the second trade was taken in London session at 9:10. If we go, so the second trade was taken right in here. It was sell trade. All right. And if you have watched my live stream, I was anticipating that there is a support at 1972 area, and there is another support at 1965 area. So as we broke below this support at 1972 area with one big H1 candle, I was anticipating that the next H1 candle will continue pushing down, and we may be able to fill this entire range till 1954 area. So I was planning my sells, and if we look at smaller time frame where this trade was taken, so this trade was taken somewhere right in here, and right in here, if I look at a M30 time frame, the stop loss was around 30 pips for a potential take profit till 1954 area, around 140 pips, but it wasn't taken on M30 time frame. So let's move back to lower time frame. If I move further in M5 time frame, this trade was taken right in here once the support was formed in a minor time frame like M5 time frame, but the over overall trend was bearish, and I was anticipating that we can continue pushing down. I executed my trade right in here. You can see an arrow right in here for a potential take profit till 1945 area. But the whole idea, but the whole problem right in here was that we were approaching. If I zoom out, you can see we were approaching this support area. Let me change color of this support area, and if we look to the left, we can see we have approached this support area, which is of a problem, and it wasn't usually very easy to break the support areas based on M5 time frame, as I have taken this trade based on M5 time frame. So the take profit should be around this area, which is around 20 pips, and however I ended this trade in break even once the M5 candle started closing bullish and the next M5 candle broke above previous two M5 candle highs. I knew that the trade at this point is over, so I closed this trade. And the rest of trades were sell trades, and in an anticipation that we can continue pushing down. But these are two trades that we will now focus on because these are high volume trades, and these trades work out. So here is the screenshot from live stream which I have taken. So at that time M30 candles were closing right in here, and I was anticipating that we can break below 1965 to continue pushing till 1955 area. And let's see what actually happened in here. And if I look at M30, so the screenshot was captured right in here when prices were around in this area. So I took two trades, the 5 lot trade and 20 lot trade. The 20 lot trade was taken once we break below 1965 area. But the 5 lot trade was a tricky trade. It was a risky trade based on 5-minute time frame. The stop loss and rewards on this trade were massive. That's why I took this trade. And if I look at M15, how I took this trade, so the trade was taken right in here. This was the sell trade, a sell arrow for that 5 lot trade. So I knew that we are pushing down in M15. There are 3 to 4 M15 bearish candles, so I anticipated that if we can break below this M15 candle low, previous M15 candle low, by placing a stop loss of 20 pips, and I was anticipating that candles gonna break in next 2 to 3 candles. That's why I have took this trade, which resulted in profits. And the next trade, 20 lot trade, was taken based on 5-minute time frame and in an anticipation on higher time frame that we are pushing down. So the trade was taken right in here, and this whole move down happened in less than 1 minute. If you go through my live stream, you can see this is 1 minute move down. So this is the profit that I booked for the day, but I didn't let my trade run for entire 1955 area that I was anticipating, which is a mistake on my end. It is a psychological error where traders usually don't let trades run for full TP. And there was another opportunity arrived almost 10 minutes later, in which the M5 candle broke below previous M5 candle low based on higher time frames that we are pushing down, and I took this trade, but it was small lot trade. Actually, I should have taken this trade with full risk, but previously I took the trade and I wasn't emotionally ready to execute another trade. That's why I missed this trade, and in future I hope so that I can capture these sort of trades. But you know, it is what it is, and I am trying my best uh, to cope with these emotional barriers. All right, and the next trade was taken around New York session. In New York session, it was counter trend trade, and if I look at yeah, I closed this trade right in here and executed an other trade that I am talking that I missed based on M5 time frame. So this is that trade which I should have actually taken. And once we reached at this area, which is around 1952 to 1949 area, I was anticipating retracement based on higher M30 time frame, which do happen. And so keep in mind this trade bias in which I was anticipating that we are expecting retracement, and I will explain how I missed an amazing trade. So moving on to next trade. So it was counter trend trade, and if I look at it right now in here, you can see this trade doesn't make any sense at all. So that trade was right in here. No, no. That trade was right in here, and I missed this trade, and I outlined these counter trends are counter trend moves are usually short-lived with low probability of working out. That's why I didn't execute it on this trade, in which we are tracing, and we created a resistance. We broke above that resistance, but there was my reason that I will not execute on these trades. So later on, the amazing trade idea that I missed was right in here. Let me explain you why. Maybe today or the day after tomorrow I can capture these sort of trades. All right, if I look at my screenshot, I was anticipating that I'm waiting for retracement for sells. So basically it was a retracement once we moved up, and it was Comet Comics open. This candle was Comet Comics open, and on the next candle where New York session opens, it moved pushed it down. So actually I should have kept in mind that NY session is opening, and there is usually volume at NY session, so I should have executed these cells. These cells were in an anticipation based on higher time frames that we are pushing, we need retracement, we will retrace and continue pushing down to fill this range. The trade should execute once we break below these M5 lows by placing a stop loss above these M5 candle highs. I could have secured like 40-50 pips from this trade. So, but let's look at what I actually did. I actually took a buy trade on Comet Comics Open. We pushed down and the candle closed above all these resistance levels. So I was anticipating that we can continue pushing up to in this somewhere in this range at 1959. So I executed this trade, but the whole idea is why I didn't held my trade for long. I closed this trade for 23-24 pips of profit. The reason was I knew that in 5 minute candles are closing and we can retrace all the way back down, create a support to potentially keep pushing up, because we have already moved up like 40 pips at that point. So that's why I closed that trade and I didn't held that trade for long, because it wasn't a swing position, it was a scalp position. Later on, the trade that I regret was this sell trade. Alright, we will look at it now. So if we look at higher time frame in M30, the M30 candle, this trade was taken on this candle right in here, on NYSE open candle right in here. So the previous M30 candle closed bullish, we created a support, and the next M30 candle starts to break below the low. That's where I executed this trade. But this is the trade where I could have managed my risk to almost zero, but I took a big loss on this trade. So let's go to M5 time frame where the trade was actually taken. So in this M5 candle, if you remember watching the live stream candle which break below all the lows to left, I was waiting for better sells with small stop loss, because if I execute right in here, my stop loss will be of 50 pips. So the next candle was created an upper wick first and then starts to break below the lows where I executed this trade. Actually, the trade should the sell stop should have placed like 2 to 3 pips below the candle low. So the candle created a low in second half of this M5 candle, and my buy stop got picked, and once it got picked I should have closed this trade in like 10 pips drawdown, because I knew that it is second low formation for the M5 candle. So that's how I could have reduced my risk. So I will give myself a very poor grade for not managing risk well on this trade. And the next 20 lot trade was taken as a buy trade at so this buy trade was an emotional trade, but the way and this buy trade was taken at 1857. Yeah, so this is the buy trade that I took by placing my stop loss below these lows in an anticipation that this candle is breaking above M15 candle, and if we break above this high we can continue pushing up. But the trade idea didn't play it out perfectly, so I closed this trade in around 5-6 pips drawdown which is impressive, like 20 lots trade, and I am getting out in minus 8 900 US dollar loss. So the risk management on this trade was amazing, but technically this is a low probability trade, so I executed high volume trade on a low probability setup. And the next trade was a full lot trade. The volume was low at that point, and I knew that it is very risky trade. And if I look at my live streams, I even mentioned that it is a risky trade, so I didn't took a screenshot of that. But if you look at live stream, you can see I mentioned that it is very risky trade. Placed a stop loss below this M5 candle low, which is around 10 pips. So the trade got stopped out, and it was very low probability trade. So these two trades were not technically very sound, and these were low probability setups. So that's why I have lost. And this trade is all my personal mistake, where I took a huge loss on a low probability. Actually, the probability was high, but the mistake was done on my part in managing risk. So I hope you understood how I do analysis. So this video was basically helping the people at live for the help of people at live streams to better understand what sort of price action I am looking at, and how I look at markets and what to expect and how to do better execution. So that's it for now, and I will see you tomorrow for overview of 28th of March. Until then, take care, have fun, and I will see you tomorrow.